And welcome to NTD Business. Thank you very much for tuning in today. Appreciate it. To start off, more potential bad news for foreign investors in China because the country could be sending another sour signal to foreign investors. Sources are telling Reuters that Chinese Premier Li Qiang will be skipping out on an important meeting with global CEOs. And the sources said that Li will still attend the upcoming China Development Forum later this month, but he has no plans to meet with visiting business leaders. Now, this meeting usually serves as an opportunity for executives and Chinese policymakers to chat about foreign investment, which, by the way, foreign investment declined in January. Now, Chinese Premier Li Qiang skipping this meeting definitely does not bode well for confidence. So we have to ask, is the conditions for businesses in China, foreign businesses that is it going to worsen from this point on? It's something that all investors should be asking themselves. And global businesses have been trying to navigate China's sentiment towards overseas investments. And this is coming at a time when Beijing has introduced broader anti-spying laws and raided companies, none of which bodes well for these companies trying to operate in China. In fact, for anyone who's trying to enter the market. This also comes right after a highly anticipated annual news conference with Li, which was also recently scrapped. Now on to markets. U.S. stocks ended sharply higher on Tuesday, with the S&P 500 registering a record high close as Oracle shares surged and consumer price data failed to dampen investors' hopes of interest rate cuts in the coming months. Here's a quick recap.
U.S. stocks ended sharply higher on Tuesday, despite hotter than expected inflation data dampening hopes of a rate cut anytime soon. The Dow gained 0.6%. The S&P climbed more than 1%, while the tech-heavy Nasdaq soared 1.5%. The Consumer Price Index from the Labor Department showed inflation ticked up for the second month in a row. That means rate cuts from the Federal Reserve likely won't start until June or later. But investors appeared to shrug that off, particularly when it came to tech stocks, says Sam Stovall, chief investment strategist at CFRA Research.
I think investors are basically thinking that inflation is fairly sticky, will take its time to reach the Fed's goal, but you don't really want to stay away from technology for too long. Maybe small caps you can stay away from because they would likely be more adversely affected by the Fed being slower to lower interest rates. But technology, their earnings seem pretty solid.
To his point, shares of Oracle, up more than 11.5%, hit a record high a day after it reported upbeat quarterly results and said it will make a joint announcement with NVIDIA. Shares of the artificial intelligence chip giant rose more than 7%. On the downside, it was a rough day for airlines, with shares of Boeing falling more than 4%. The plane maker told employees in a memo Tuesday it is adding weekly compliance checks for every 737 factory work area and additional audits of equipment to reduce quality problems. The U.S. Federal Aviation Administration has curbed Boeing production following the mid-air panel blowout on a new Alaska Airlines 737 MAX 9 jet in January. Those delivery delays caused carriers such as United and Southwest Airlines to warn that plans to increase capacity were now in doubt. Shares of Southwest fell about 15%.
And today, the U.S. House of Representatives plans to vote on a bill that is going to give TikTok's Chinese owner ByteDance about 6 months to divest the short video app used by about 170 million Americans, or potentially face a ban. Here's the report.
A U.S. bill to crack down on TikTok is set for a vote in the House of Representatives on Wednesday. Lawmakers from both parties say the app poses a national security threat. If passed, the bill would give the short video app's Chinese owner ByteDance about 6 months to divest or face a nationwide ban. The app says it's not clear whether Beijing would approve any divestment, which the company needs in order to make it happen, or whether it could even be done within 6 months. In a statement, the company said, quote, "This legislation has a predetermined outcome, a total ban of TikTok in the United States. The fate of the legislation remains uncertain in the Senate. where some senators want to take a different approach. Still, President Joe Biden said last week that he would sign the bill if it clears both chambers. Casey Fiesler, an information science professor at the University of Colorado and herself an avid user of TikTok, questions whether the focus on the app is obscuring the bigger picture regarding data privacy and potential manipulation in the industry.
If TikTok is able to divest from China, if it is, for example, purchased by an American tech company, I would just still like to see some meaningful regulation, because I have similar concerns with American tech companies that I have with TikTok.
The House vote on Wednesday is under fast-track rules that require support by 2/3 of House members for the measure to pass. The bill would give ByteDance 165 days to divest TikTok. If it fails to do that, app stores operated by Apple, Google, and others could not legally offer TikTok or provide web hosting services to apps controlled by ByteDance.
And inflation has edged up a bit, which has essentially squashed predictions of a possible rate cut before June. February's consumer price index went up from a year earlier, and the rise was driven by gas and shelter prices. And core inflation, which leaves out volatile food and energy prices, also jumped. Federal Reserve Chair Jerome Powell also pays close attention to core service inflation, and that number ticked up last month and is on an annualized basis. Nearly all forecasters are now expecting the policy rate to stay at its current rate of 5.25% to 5.5% during the Fed's next meeting. But a majority of traders still do see a chance of rate cuts by June. Boeing's slew of mechanical problems recently is having a ripple effect. Southwest Airlines says it plans to hire less people in 2024 because Boeing is expected to deliver far fewer planes due to safety concerns. United Airlines, likewise, is cutting back on pilot hiring because of Boeing's expected manufacturing and certification delays. This could all cost Boeing big money and potentially cause a snag within the travel industry. Take a look.
2024 has not been kind to Boeing thus far, and that trend isn't likely to change anytime soon.
I think Boeing's in for a long, hard year.
On Monday, according to a passenger, a 787 Dreamliner heading from Australia to New Zealand abruptly dropped hundreds of feet mid-flight in what LATAM Airlines called a technical event.
And I opened my eyes, and there was various individuals at the top of the plane, just stuck to the roof, and then they fell to the floor.
Last month, the United Airlines 737 MAX reported jammed flight controls during a landing in New Jersey, and in another case, the FAA found issues with de-icing equipment for some Boeing planes.
That they have fallen to this level is really quite distressing.
The NTSB is also looking into the January 5th Alaska Airlines flight where part of a 737 MAX door plug blew off the side of the plane shortly after takeoff. Alaska Airlines says the plane in question was due for maintenance on the same day of the incident. The FAA says it's given Boeing until May to come up with a plan to fix issues listed in a federal audit. Analysts say these problems could end up costing Boeing billions.
It is indeed. It's an unmitigated disaster for Boeing.
And of course, fewer planes is going to mean reduced capacity, as Boeing's safety crisis is now hitting the bottom line for U.S. airlines. U.S. carriers are cutting delivery expectations next year, complicating their efforts to meet record travel demand. Airlines are warning that their plans to increase capacity are in jeopardy because of more jet delivery delays from Boeing. Now airlines are expecting a significant drop in MAX deliveries. Boeing slashed the number of jets Southwest should expect this year from 79 to just 46. United is also anticipating delays from Boeing. Meanwhile, Family Dollar and Dollar Tree are set to close nearly 1,000 stores. Family Dollar will close 600 stores in the first half of this year and at least 370 more over the next several years as store leases expire. Many Family Dollar stores have been plagued by health and safety concerns. This year, the struggling discount chain was hit with the record $41.5 million fine for violating product safety standards. The U.S. Justice Department said the chain was selling items that were stocked in a rat-infested warehouse. Dollar Tree bought Family Dollar in 2015 and for $8.5 billion. The combined company hoped that by joining forces, it could fend off bigger retailers like Dollar General and Walmart. Walgreens will be donating infant formula to settle a case that it grossly inflated prices during a nationwide shortage. New York Attorney General Letitia James says Walgreens raised prices after a 2022 recall by a formula maker, Abbott Labs. In at least one case, James says the pharmacy chain marked up formula prices by more than 70%. To settle the lawsuit, Walgreens has agreed to donate more than 9,500 canisters of formula to low-income New York families. The company has agreed not to charge excessive prices on vital consumer goods and will pay a $50,000 fine. Walgreens did not admit or deny any wrongdoing and had no comment. As parents fret over whether teens are spending too much time on their smartphones and social media, a new survey indicates that some teens are putting limits on themselves and think their parents should too. Here's a few things parents should know.
In the midst of discussions of the potential harm of social media use to teens' mental health, a survey from the Pew Research Center found some teens dialing back their use.
About 4 in 10 have cut back on their social media use, and about a third say that they've cut back on the time that they spend on their smartphone.
Monica Anderson, director of Internet and Technology Research for Pew, said teen girls, who other studies have indicated may face particular social media risks to mental health and body image, are also more likely than teen boys to set limits.
Girls are more likely than boys to say they spend too much time on either of these technologies, but they're also more likely than boys to say that they've taken steps to cut back on the time that they use on either social media or on their phone.
The survey also found teens mindful of their parents' screen time and how it impacts family interactions.
We asked teens to assess how often their parent was distracted when they're trying to have a conversation with them, and nearly half of teens said that this happens at least sometimes.
Still, many parents said it's a priority to keep tabs on their teen screen time, with both parents and teens equally likely to say they argue sometimes about when it's time for teens to put the phone down. In Washington, I'm Karen Kaifa.
And inflation continues to put pressure on small business owners, whose optimism fell to its lowest in 9 months. The National Federation of Independent Business Sentiment Index dropped about half a point from last month. On the rise, though, is the number of owners who consider inflation to be their most pressing problem. And in the newest report, inflation is the top concern for owners. Small businesses have felt the punch of higher costs and tighter credit conditions. In fact, the share of owners who expected better business conditions in 6 months also dropped a point. The last few years have been tough for home buyers with high interest rates, low inventory, and rising prices, but the National Association of Realtors says there's reason for buyers to be more optimistic going into this year's spring market. Here's a look at what buyers and sellers can expect.
It's not just the flowers in bloom this spring, the housing market is blooming too. So if you're looking to buy or sell a home, many experts say this is the best time of year.
We always see more buyers as well as more sellers come onto the market.
Lawrence Yoon with the National Association of Realtors says many families want to close before the new school year starts in the fall, which is why this is a popular time to buy or sell. So, what can buyers expect this spring?
We are seeing an improvement in the consumer confidence about home buying process.
Yoon says buyers can be more optimistic for a few reasons. First, more inventory, which means less competition.
In the past 2 years, we have had a historically low inventory.
Secondly, mortgage rates have slightly dipped recently. According to Freddie Mac, last week, a 30-year fixed mortgage rate averaged 6.88%. At the end of February, it was 6.94%. While rates are slowly coming down, they're still higher than this time last year. Home prices, though, are still high.
We had a substantial price increase in the past 3 years, about 30-40% price gain in many parts of the country.
In January, the median existing home sale price was $379,100, according to the National Association of Realtors. That's 5.1% higher than January of last year, and it's the 7th month in a row that prices have gone up.
From why Gemini won't answer questions about global elections to keeping Paris safe during the Olympics, we are going to round up this week's big stories from the AI revolution. Let's take a look.
From why Gemini won't answer questions about global elections to plans for artificial intelligence to be deployed at the Paris Olympics, this is Generation AI. Sam Altman will return to OpenAI's board along with 3 new directors, the ChatGPT maker announced. Altman, the company's chief executive, was fired in November of last year. His ouster was reversed within days after shock from employees, investors, and OpenAI's biggest financial backer, Microsoft. An investigation by a law firm into the events surrounding his firing has wrapped up, and the company has created new governance rules and strengthened its conflict of interest policy. The board said it unanimously backed Altman's leadership. Google is restricting its AI chatbot Gemini from answering questions about the global elections happening this year, the Alphabet-owned firm said. The update comes at a time when advancements in generative AI have fanned concerns about misinformation and fake news among the public. Google's AI products have been under the microscope after inaccuracies in some historical depictions of people created by Gemini forced it to pause the chatbot's image generation feature late last month. NVIDIA has been sued by 3 authors who say the chipmaker used their copyrighted works without permission to train its AI platform. The proposed class action seeks unspecified damages for people in the US whose content helped train NVIDIA's NeMo AI platform. NVIDIA declined to comment. France is planning on using AI-driven video surveillance tech to keep Paris safe during the 2024 Summer Games. It tested the tech out at a Depeche Mode concert and said it was a success. But rights campaigners warn the technology poses a threat to civil liberties.
Porsche has unveiled its most powerful car ever. NTD Sean Marshall has more on that and the company's current and future outlook.
The electric Taycan Turbo GT has 2 motors and has already set 2 racetrack speed records for electric cars. Under normal circumstances, it can reach an impressive 777 horsepower, but it also features a launch control button for maximum acceleration from a stop. Taking the vehicle from 0 to 60 miles per hour in 2.1 seconds. And in other Porsche business news, Porsche will not take part in a fierce discount battle in the weakened Chinese market and is instead sticking to its principles of maintaining premium prices, even if it costs the luxury car maker market share. Porsche boss Oliver Blume said this value over volume strategy was the reason for deliveries in China falling 15% in 2023, with the local economy facing an economic and real estate crisis. Bloom said that lots of car makers were offering discounts in China, adding Porsche would not follow this theme and had therefore deliberately taken volumes out. They also said Porsche will focus on brand and pricing in the future. The muted outlook aligns with parent Volkswagen, which earlier this month said sales growth would slow in 2024 due to headwinds, including from weaker economic growth, stiffer competition, and higher costs. With 3 other new launches in its Panamera, Macan, and 911 model lines planned for 2024, Porsche said it's planning the biggest year of product launches in the company's history. Sean Marshall, NTD News.
German sportswear giant Adidas posted its first loss in more than 30 years in 2023 today, as the CEO works to turn the brand around after a messy breakup with rapper Kanye West. Here's more.
Adidas posted its first annual loss in more than 30 years on Wednesday. The German sportswear giant lost just over $63 million, marking its first year in the red since 1992. It proved a challenging first full year in charge for CEO Bjorn Gulden. He had to deal with the fallout from breaking ties with Kanye West. Adidas suspended sales of the rapper's highly profitable Yeezy sneaker line in 2022. Golden resumed sales to clear remaining stock while trying to boost popular products like Samba shoes. Adidas shares have recovered and overtaken Nike and Puma since Golden took over. The firm said it expects its underlying business to improve in 2024 and sees double-digit growth in the second half. Adidas aims to claw back market share from rivals even as consumer appetite for sportswear declines. It's benefited from a trend for low-rise sneakers like the Samba and Gazelle lines and ramped up production. That trend helped footwear sales grow by 8% in the fourth quarter, even as apparel sales fell 13%. Adidas sees sales this year falling in North America, its second biggest market, but it expects a strong recovery in China, with sales there forecast to grow at a double-digit rate.
And that's all for our episode today. Thank you very much for watching, and I'll see you tomorrow.